I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market. Today, soybeans recovered. That new record domestic demand really gave us a little bit of a pop. Interestingly enough, with the domestic demand, that's really helping to move some of this crops out as the new record for 2018 is going to be coming in shortly. But what some of the farmers have found is that they have a new way of getting their soybeans to China without having to pay that tariff. With the Argentine drought, all over our winter time really left a lot of the crushers without any product to do any crushing. So they've been buying some of the U.S. soybeans to crush there in Argentina because that's one of the biggest hubs in the world for crushing production. And then from there, it's been getting to China. Interestingly enough, it's taking a 5,500-mile detour to get there. So there has been a little bit of movement that way. With the Brazil real starting to really tumble as well, that's giving the U.S. Soybean market a little bit of a boost. You know, I think that some of Brazil is able to buy some of the U.S. soybeans to kind of move that along as well. That really seems to be the only thing that's keeping this market up, where harvest pressure is still in play here. Now with corn, it was a little bit steadier today. There's been good weather and demand and really great demand overall for corn, and that's really been offsetting to the markets, and so we've traded a little bit above and below today, and that's what's keeping the market really pretty steady. Right now, corn has the support level is right around that 350 mark. We're a little bit above that, but it's holding pretty well. And I think that right now everyone's waiting to see if we get a little bit more spike in the demand, we could get the market moving. Now there has been demand really at every level all the way down. So it seems to be that this number where we're at is we're holding firm. Now that's not to say that as some of the harvest starts to come in, there might be a little bit more pressure right now. So fundamentally, we're looking pretty good. Wheat really rallied today. It seems that the importers really started buying with both hands and scrambling over each other, and we were up double digits, 16 or 17 cents at one time. Now the managed funds have reversed their positions and pretty much are neutral now. So all their shorts are gone, and they're starting to push the market up. Wheat has been really the driving force for all the commodities across the board, certainly all the grains since the implementation of the Chinese tariff wars. That being said, when the market started to come down over these last couple of sessions, it really triggered some buying, and we've got the market really moving. We know that 520 is kind of like a little bit of a low that offered some support, and I guess it's that lucky 7. The market was down 7 days in a row, so that lucky 7 sparked some of the buying, and we moved it back up. Now, what it's showing us today is that it is a thin market, and that's going to give rise to the market being a little bit more vulnerable to more wild volatility. And that's kind of what we saw today. There still is a lot of participation in the market. Not much really happening. We're just here waiting for more fundamental news to give us a little bit better direction. But wheat looks pretty good, and it's kind of holding firm right here. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.